Hello, everyone. Welcome, welcome, welcome. So today we decided to do a live regarding Bank of England, which is actually right now. So I decided to do it at 2 o'clock exactly, 2 o'clock separate time, because we have the Bank of England. So what is expected to see right now? And actually, it's not what is expected. What it has been released just now. So it was a very busy week, as you already know, full of data, full of events, political and non-political. So just now, let me share the calendar as well. So let me just Google. Here we are. I believe now that you are able to see also my screen. Perfect. As you can see, we have the release just now of the interest rates from the Bank of England. So, and as it was expected, they deliver another 25 points rate cut. So that was widely expected. We have seen inflation falling at the end of the year, and at the same time, growth indicators were looking weak. The labor market was starting to loosen, and we can see that is also all the members of the Bank of England are in line. So you can see that all 9 of them voted for a rate cut, which is significant. The Bank of England always presents out there the votes. So we have a very united, let's say, Bank of England, so that they are not split, they are not divided. So that's very important. So I'm going to jump quickly into the charts because I know this is what interests you the most. And obviously, we're going to see the pound. Sorry for that. Just a second. Here we are. And here we are. It was it managed to break further lower on the announcement. A lot of sellers were like hiding, let's say, behind this latest 124.05 level. More precisely, the round 124 level was the very immediate support level. Guys, I was wondering whether you can see my screen or not. If anyone can let me know, because for some reason I cannot see it over here, and I'm quite worried. So a quick confirmation would be appreciated. Okay, so I really appreciate the confirmation that you can see my screen. Nonetheless, this is pound, and you cannot see it. Let me share it again. Here we are. Okay, that should be okay now. This is your session, as I keep saying, so don't hesitate to add your questions, anything you want in the chat box below the YouTube live, below the Facebook live, the Twitter live, etc. This is your session. Feel free to ask me anything you want, and feel free to let me know which assets you want me to analyze. In the meantime, let's focus on the pound. Thank you, Abdul. Let's focus on the pound, as I was saying. In line with expectations, rate decision pressured further the pound. Why? It's really straightforward. It has to do with the yield differentials. It has to do with the deviation between the two banks, Bank of England, Fed. Okay? The one actually was in that Bank of England cut and delivered indeed a rate cut. So easing policy, something that is a negative factor for the currency, right? On the flip side, we have a lot of uncertainty around Fed. Don't forget that we have seen basically signals, constant ongoing signals indicating that Fed should pause any change in its policy. And it's not only that. In the previous meeting from the previous Fed meeting, we have seen that they actually remain sideways. They left policy unchanged. So yeah, we have an unchanged and steady policy from the Fed, right? Which leaves, I think, the rate at 4.37, and we have an easing from from Bank of England, sorry, with the interest rate at 4.50. Okay, you can tell me. So, Andrea, England has a bit higher rate than US. You're right, but remember that markets are always ahead of themselves, right? So, considering the fact that Fed did not proceed with another rate cut, and actually we are expecting, and the market and the economists, the analysts in general, the economic data point that the Fed should not proceed with any rate cuts for a while, pushing basically the change of the policy, postponing the rate of the change of any policy of the policy from the Fed further, like into the second quarter of the second half of the year, I should say, but let's take it to the second quarter, is something that provides some support to the dollar against the other currencies. That's why we are seeing pound falling 123.70 currently. Don't forget that in general, pound overall is under pressure, has been to the downside for like months now, and this is in line with the fundamentals as well. As we keep saying, UK still faces a lot of stagflation risk, weak economic data, weak economy in general. So that's just adding to the whole picture, basically, right? So this trend, I should change my, that's the daily chart, guys, okay? You see, the overall outlook hasn't changed, remains in a downtrend, a significant pullback from this top that we have seen in hovering the whole January, okay? This double top, double fractal, I should say, so quickly revert. It could potentially be an M formation, not quite sure yet, okay? And like a very, so it looks like that cannot be confirmed. Nonetheless, though, let me zoom in a bit. Can you see that this is a doji candle and a really bearish daily one? But obviously the day is not over. There's no confirmed closure of this candle, but it's just food for thought for you to consider once the day ends, because it might form an evening star formation, or in general to confirm a swing lower, especially if we see it closing below the basically, let me measure it. So the 50% of this candle is over here, so that would be a nice support level. Oops, sorry. Oh, cannot recover my settings. No, that's too bad. Let me do everything again. Sorry, guys. That started over here, and I was measuring it. Yeah, it might not be an M formation, by the way. It's just we're doing a bit of homework just to monitor the pound. So downtrend failed to extend higher, momentum eased, but a sustained move lower could reinforce the momentum, the negative momentum as well. RSI, as you can see, never managed to extend above, significantly above 50, so it's back below 50 once again. So contraction, so in line with the trend. Stochastic is the same. So yeah, negative outlook remains, with these corrections just being corrections before another attempt to the upside. before I left them to the downside. Sorry. So what else? What else about the Bank of England? Obviously, we have a press conference in front of us, so that could add significant volatility. But I don't want to waste your time. I'm gonna focus on the 1 hour chart. This is pound 1 hour chart, guys. Okay, 1 hour chart. You can see that my setup, basically the intraday setup that I have. So focus a bit on the RSI and on the moving average. These two moving average, the 5 and 9, you can see they keep pointing lower. Stochastic is looks a bit oversold already, but it hasn't managed to like indicate a move higher or something. It's just flattened below 20. RSI keeps pointing lower, market did the same, so it is what it is. So even though policy remains restrictive, it seems that, and actually we are aware that Bank of England has still further room to act, to proceed with further rate cuts, because the inflation remains above target. But everything will get a bit clearer as soon as we have the press conference from Mr. Ballet, because it's a bit more cautious, more conservative, let's say. So he might follow the same example as Powell. So to be a bit more cautious stance, not like to try not to give any sign either of further easing, either of a pause. So we have still ahead of us the Bank of England conference. And the reason for this cautious stance, don't forget, is that the uncertainty that we face in general globally, with the policies, with the politics as well, tariff threats, possible supply, usually fear of supply constraint, disruption, supply chain disruption, also. I mean, tariffs have a lot of after effects, right? Oil being affected, supply chain disruption as well, and also, of course, the stagflation risk that currently the Bank of England and general the UK economy is facing. Nonetheless, guys, let me try. Sorry, just cross-checking a bit this pound in 1 hour chart with my Heiken Ashes. If you were using Heiken Ashes, you have probably seen way earlier that this decline remains strong, because that was okay. That resumption, let's say, of the downtrend started at 4 o'clock in Asia. The bodies were a bit dodgy until the European Open, right? Here is the European Open. You can see that we're getting bigger and bigger Heiken Ashes candles without any tail at the top. So that's also adding to the downward trend, because the sellers were in control since since European Open this morning. So the basically the announcement just attracted further sellers. Now, so immediate support levels, guys. I'm gonna just I believe that we are already at 50% retracement. Already broken, and is nearly close to the 65%. So the immediate support level is nearby. Basically, some around. Let me just double check. That should be. Let me measure it. Sorry, just a second. So currently it's at still actually close to 124. After the jump lower, it reversed, it pulled back. Sorry, it corrected and it's like back to 124 level. So the very next support level is 45 pips lower. But yeah, so I don't know how many scalpers we have over here, intraday traders and etc. That's the 15 minutes chart just for scalpers. Broken, close below it, further decline. That's a new candle. Parabolics are remain above it, stochastic bearish cross. So this seems that for the very short time frame, so the very next few the next hour, the decline is expected to continue considering the technical picture. But okay, I was wondering whether we're gonna see a bit of a consolidation ahead of Mr. Bali's conference, but for the time being, I cannot really see something like that, especially after the break of 124 level. So there is. So this is a 15 minutes chart, okay? The reason why I'm presenting it is because we might have some scalpers over here. So guys, closed, right? Big tail at the bottom and a tiny tail at the top, but this is Heiken-Ashi. So there is still a debate between buyers and sellers, at least in the very short time frame. So over here, the new candle is about to close in 12 minutes from now, so we have plenty of time still. Stochastic is in line with the decline, but confirmation could be seen as soon as we have the 15 candle closing as well. Overall, however, for day traders, it is still a straightforward trend, even for day traders as well. But yeah, nonetheless. Let me just see a bit the questions because I haven't seen a single thing. I'm sorry, back on England. It's not so much what we were expecting today, dear Tijani. To be honest, it was widely expected that particular rate cut. Obviously, we have a bit of a consensus regarding the press conference, but the focus is really on NFP tomorrow, as you are very well aware. Because yeah, this the Bank of England, as I said, it was expected, and we still can say that based on the data, the inflation, the employment, what else? The inflation for Bank of England, the housing market as well. Everything points from economic perspective to further cuts, or at least that they have still some room for further to cut further, to proceed with further cuts, because the inflation managed to fall at the end of the 2024. Growth remains weak. Labor market has started to show signs, as I said earlier, of a slowdown. So that's in line with an easing of the policy. The only thing that is a bit higher is the wage growth. But anyway, remember that those numbers are a bit backwards looking. So doesn't really affect the fact that monetary policy should and is still, it still remains a bit constrictive. What else? The question for both, not only Bank of England, but for Europe as well, which are the economies that face the biggest risks, okay, not only from economic perspective, but also due to the Trump administration. So the key question for Bank of England is how fast has to move, okay? And yeah, how fast they can move, they can react. While in the Europe, the question is where the end rate will be, when they will start cutting rates. ECB, when they're gonna stop cutting rates. Bank of England, how fast have to move. Yeah, so that's pretty much for the cable. What else I wanted to mention about the cable? Let me check a bit the yeah, we've checked the overall picture, we have checked the intraday picture. So yeah, any questions regarding pound is gaining, or what do you mean gaining? That's the high Kanashi candles, by the way. Let me shift to also no, yeah, this is that's a candlestick, Japanese candlesticks, guys. 50 minutes chart, keep moving lower, moving average are pointing to further decline. MACD the same, stochastic posted a bearish cross. Yep, RSI 1950, but still points oversold, but you see, still points further lower, so there is further room to the downside, it seems. Yeah, so it is what it is. Intraday negative in the very, very, very short time frame, and actually even in the 1 hour, 4 hour, we can see the same performance. And regarding the daily, as I mentioned, keep an eye on today's closure and even tomorrow's closure. It depends how we will close today, and have a look on whether we're gonna see this M formation or the breakout of 123.50 and so on and so forth. In a potential M formation, guys, what that means, you need to measure the body of the neckline of the M from the top, and that should be your next support level, which is goes down to 119.95, so 120 level. Just food for thought for tomorrow and for the next week as well, okay? A bit behind. Why did the pound didn't react to the rate cut? It did react. What do you mean didn't react? It shifted down. Dixon, what time frame are you watching? If you're referring to a minute chart or a 5-minute chart, so that's a different story, my friend. That's a poor scalping, which you should, I mean, okay, theoretically, scalping is a strategy up to 5 minutes, right? 1 to 5 minutes, a few seconds sometimes, but maximum is 5 minutes. So if you are watching, if you're a scalper, you are watching in 1 minute. As a scalper, you shouldn't really, you are not trading the news. As a scalper, you should stick on your scalping strategy and avoid opening any positions close or during the NFP, the data releases. Why? The announcements. Why? Because you could easily kick your stop loss and then come back to your initial direction. So avoid the market noise. Now, that was on the announcement, right? That dip was on the announcement. Guys, this is a 1 minute chart, okay? That was on the announcement. A bit of a consolidation, but I remind you, this is a 1 minute chart, okay? 1 minute chart, not indicative for intraday outlook for intraday performance or day performance, etc. So yeah, that's just some so that was on the announcement. So here we have a bit of a ceiling and a support, a bit of a range, flatten, stochastic point higher. So that might be a bit of a rebound until 123.90. That's 1 minute chart, guys. But there are precise scalping strategies that should be a scalping setup that should be applied in 1 minute chart. For example, and basically is the stochastic. So the fact that it already crossed above 80. However, the signal line is, so the red line, the dotted line is still well below. So yeah, it seems that there is further room for the next few minutes. 1 minute, this is 1 minute chart. Yeah, before another swing lower. So scalping implies two signals basically could, so stochastic as an indicator for scalping indicates that a reversal, a bearish cross at overbought territory is a sign of a decline, while a bullish cross or even a break above 20 in stochastic is an indication of a rebound. But currently, we cannot really tell. It is on the overbought. However, we can't see a bearish cross yet. So, yeah. So, yeah, feedback from gold for sure. It's not that they affected the euro as such. More precisely, should be in general the dollar. Wait a minute. So just sorry. Just a second to double check, my dear friend. It's my dollar index. Here we are. No, actually, you're right. Dollar remains steady, but neither. I don't see a reaction neither in euro, Levy. I mean, not the time of the release, actually. So the time of the release was over here, actually. So here, the past 30 minutes, we're still, this candle hasn't finished. So the decline that you have seen in the European session in general, I mean, since this morning, since Frankfurt opened, is not because of the Bank of England, right? So we had, I don't know whether you follow the news, guys, but we had this morning, actually it wasn't the morning, it was few hours ago, we had Cincy Polone, okay, basically an executive, sorry, I don't know, basically we have seen a report from Reuters, okay, more precisely, so that Mr. Cipollone, stated that there is still further room to cut rates by ECB. Remember what I told you yesterday, that the key question about ECB and Europe is when they will stop, when they will pause, and when they're going to stop cutting rates. Okay, that was the key question from the key question that we face currently for Europe. So the fact that Mr. Cipollone stated that, yes, we have still room to act, we have still room to cut rates, indicates that we still have on the table further rate cuts from the ECB, which is something that adds pressure on the euro. The further rate cuts are negative for the currency. Okay, so it's not the Bank of England, but it's the comments from Cipollone to Reuters, saying that there is further room to adjust rates downwards. Yeah, so let me and also we had retail sales today from Eurozone, which they declined basically, still indicating that the retail sector is struggling. And we had also, let me be precise, I think it was manufacturing PMIs. Let me double check. Retail sales. I'm quite sure that we had also the German manufacturing orders, but I cannot see it in the calendar, which is a bit bizarre. But yes, we had. Well, I'm quite sure, yes, that we had the manufacturing orders improving a bit. But as I said, that is it's just pointing to a bit. Let me just cross check it. Yeah. Okay. Yeah. So we have seen that the manufacturing orders in Germany improved a bit at 6.9%. Yeah, at 6.9% in December. But not significant enough to indicate any, let's say, to change the overall picture in US, in Germany, and in Eurozone as a whole. So yeah, nothing really. Just suggest a bit of a less depressed manufacturing sector than before. Yeah, so that's why we have seen euro under pressure as well. Gold. Yes, sorry, my bad. By the way, I will post. I haven't managed to post it because of the live, but I'm gonna post soonish, as soon as we are done, an article for gold and Bitcoin ahead of NFP tomorrow. Okay, so have a quick look. And we have an NFP live analysis tomorrow with my colleague Mihalis this time. So join us, okay? Ask anything you want. We're here to help. So this is gold. I mentioned several times in my lives, if you are following us, that we were expecting further record highs. We still do. Technicals are in line with this outlook. Nice, steep, but still strong incline for gold. Any pullback is just an indication. Basically, any pullback is just a pullback before another attempt to the upside. Fundamental support. The gold, even though the fact that Fed pause the rate cuts is something that is positive for the dollar and negative for the gold. But the tariffs, the uncertainty about the economy, all this fear that Mr. Trump caused, okay, along with some purchasement from Chinese bank for gold reserves, but it was a while ago. But in general, this geopolitical uncertainty boost safe haven demand, right? So, regardless of the fact that dollar is not really is not affected negatively by the Fed. However, the dollar is negatively affected by all the rest, by signs of short-term tightness, geopolitical uncertainty, and so on and so forth. So, and also something that I saw in Bloomberg earlier, let me read it out loud for you. Basically, Bloomberg stated, basically was there based on their research, etc., that the major dealers of gold, okay, are seeking to shift the gold to the US before any tariffs are imposed, and 1 month so-called lease rates in London have risen as well to 4.7%. So that listen rate in London basically presents the return that gold buyers, gold holders can get, let's say, by loaning their gold, their metal to someone else, to short-term buyers, and etc. So based on the listen rates in London, we can see that the holders of gold, as I was saying, are seeking to shift to loan, let's say, their holdings. I know that it's a bit complicated, but I'm trying to say that this is another reason for bullish gold so far. But nonetheless, let's get back to the 1 hour chart because I want to show you something. This is it. A bit of a correction from the record highs, from the recent record highs that we have seen, right? Didn't last it for long. It found the support above the previous swing high. It didn't even touch the previous swing high. Use swing highs and swing lows as your immediate support and resistance levels. They're very, very useful. So we can see that it dipped down to 28, 49, 46, somewhere there, 48 something, and quickly revert higher again. We can see that the candles of the high candles are getting stronger. That is a bullish cross. Can you see that? It's a bullish 5 and 9 exponential moving average in my 1 hour chart, which will be confirmed in. We still have 23 minutes to go until this candle close. But yeah, if something like that happened, the next resistance level intraday, at least, it will be the previous swing high. And if that breaks, then it will be the record highs, the 2882. If that breaks, we're gonna keep having new record highs and so on and so forth. So basically, using your Fibonacci extensions, you can spot the very next support and resistance levels based on the time frame that you're trading, obviously. So yeah. So as I would like also to move down to the 30 minutes chart and look at that. Bullish real cross, up, no tail at the bottom, up. So yeah, pretty much you have further room to the upside, as you can see. For gold, yeah, let me just would like to that's also high Kenashi. So ignore that. Yeah, so further, that's again the same chart, 30 minutes chart in gold with high Kenashi, with parabolic SAR. You can see that they're far away from the price, indicating further move higher. Stochastic is a bit flat, but neither a bearish cross that could, indicate a pullback. So far so good. Yeah. In general, though, guys, the trend remains positive for the gold. Nothing has changed, right? Constantly consecutive moves higher highs, higher lows. I would like, do you remember, I don't know how many of you were here, do you remember when we set these Fibonacci levels on? So this Fibonacci extension. So that was a Fibonacci extension from this swing from here, here, and down here. And basically, we had the 27.65 as the very next immediate resistance level and 28.76 as the new record high, which was already hit. And so, yeah, that's why I keep saying, do your homework in order to be able to spot a breakout of a breakout and possibly the next possible move. So what we have over here in this latest swing daily chart is that a break of the recent record highs could open the doors to 29.85. 29.85. Okay, obviously 2900 is a very strong level. So we might see a bit of a consolidation over here for a while, but a break above it could shift the gold another 85 pips higher. Nonetheless, okay, let's go down. Let me just actually do a quick analysis using the candlesticks and not Heiken ashes. Here we are. Here we are. So this is the 30 minutes chart. Gold, bullish cross. But, yeah, something is changing, and at least in the very, very short time frame, guys, the next few hours, the next few minutes even, though. It might be the fact that US has not opened yet. It might be the fact that we have jobless claims in an hour. It might be the fact that we have NFP as well tomorrow. So it seems that gold, again, I remind you, I'm referring to the 30 minutes chart in the very, very short time frame. It seems that the asset has flattened a bit, or it will enter a short consolidation, a bit of a ranging market, because we have this stochastic flatten, RSI flatten. Okay, market is really close to zero, but still a bit negative. But yeah, even the moving averages, the 5 and 9. They're like a bit pointing to the right-hand side and not like a sharp move higher. So we might see a bit of a consolidation. I suspect it's because of the fact that US, basically we have, because we have the jobless claims soon in 45 minutes. So yeah, that might hold a bit in the very, very short time frame, gold a bit unchanged. So this rally that we have seen since this morning might pause a bit for now. Okay, so no, Tijadi, the pound, the UK is actually, it might be one of the few countries that managed to see inflation near target. So they don't have a high inflation persistence, but they are, but their inflation is at the target level. So that's why it leaves room to the Bank of England to have further cuts, which is negative for pound. Okay, yeah, it is negative for pound. What I put on basically yesterday, today, but I haven't posted it yet, for gold, it was more or less to this overall trend. So have in mind, okay, there's a lot of wind today. Sorry if you can't hear some background noise. I'm really, really sorry for that. But guys, something I want you to focus on me for 5 minutes, okay? Not on the charts, but on what I'm saying right now. The past years, I think it was after COVID. Okay, gold obviously has a correlation with NFP, but I have seen a research that basically they compare the gold reaction during an NFP, and we have basically seen that the last 3 years, more than 3 years, basically, gold reacts stronger to a negative job report, to a disappointing NFP. Okay, so it's not that about where, it's not a matter of whether it goes up or down, it's a matter of how strong it reacts, so the volatility that it faces. And it seems that the last 4 years, I will say, we have seen that NFP reacts, that gold reacts more when the NFP is disappointing, in the missed expectations and etc., rather than in line with expectations job report, or even a bit of expectation, a bit beats the expectation. So there is a negative correlation between NFP surprises and gold. What it means by NFP surprises, we mean like a big surprise, either to the upside, either to the downside. Okay, a surprise. So if, for example, we have NFP and we're expected to be released to show 50,000 jobs, but instead we have 250,000 jobs, that's a big surprise, right? Big surprise. Or on the flip side as well, if we're expecting to slow down to, I don't know, 10,000 jobs, no, that's a bad example, 100,000 jobs, but instead it comes out with just 10,000, big surprise, but downwards this time. But the thing is that it has been seen that the last years the gold price has a negative correlation, so an inverse correlation with NFP price, with NFP prices, let's say. So what that means, it means, so you can see that, let me put the weekly chart. You can see that we have, okay, the gold this year has been in rally. Okay, let's focus on the current news, let's say. Okay, has been in a rally now since 2022. Okay, 2023 was a bit sideways, but let's focus on 2024 onwards. We have seen that it's in an upwards move, still very strong one. So that's clear. I mean, the positive picture is clear. Now I'm gonna zoom in. Consider what I told you earlier, that we have seen that the past 3 to 4 years, there is an inverse correlation. So what that means, it means that the last 3 years, on the NFP announcement, okay, on the NFP announcement, okay, Bank of Mr. Ballet speaks right now, sorry. Okay, let me finish gold, okay, and I will get back to Mr. Ballet's conference. So I was saying, it has been, we have noticed, basically this research noticed that the focus basically on the 15 minutes, on the reaction of gold, the very first 15 minutes after the NFP, the very first hour after the NFP, and the very first 4 hours after the NFP. And there was basically it acted positively, okay, it acted positively the majority of the surprises, it acted positively. So that means that sorry, basically there is an inverse correlation. So on the positive surprise of the NFP, the positive surprise of the NFP, we had seen that the gold was under pressure, while on a negative surprise from the NFP, the gold moved higher the very first 15 minutes up to 4 hours. So why I'm saying all this? Because this time, okay, the NFP basically tomorrow is expected to show a bit of a downwards, is facing basically some downwards pressure. Okay, so but nonetheless, so what that means, the downwards pressure means that we might see NFP slowing down a bit. So that means lower, loosening labor market for US. The key, however, will be whether it will be a surprise or not, whether it will be really far away from the expectations or not. In case that the NFP tomorrow comes strong, okay, above expectations, that could have a negative effect on gold. If it comes weak, that could have a positive reaction on the gold, sorry. But I remind you that all the rest of the economic data, fundamentals, politics, uncertainty causes a lot of safe haven. The overall trend of the gold is upwards. So have in mind that only a move and a break below 2800s, okay, 2800s, or even more precisely 2789, is the only way to add concerns for a potential pullback, to add concerns, sorry, for a potential reversal of this upwards trend. It's the only scenario, let's say. So as long as we don't see the gold returning below 2800s, and to be more precise, 27, 20, let me just be precise. Yeah, 2790 level. There is no indication that this overall trend will run out of steam. There's no indication. So any pullback today, okay, any pullback tomorrow, okay, on ahead of the NFP or on the NFP, it could just be a pullback. It will be just a pullback. It will be just, it could even attract buyers. It could be just another chance for the market participants to buy at a lower territory. But I remind you, if and only if we don't see a decisive break below the 2800s, and more precisely the 2790 territory. Even though there are some, we have also the 20-day moving average at 2760, so that could be an even better support level for gold. Okay, so any pullback, it will be interpreted as another chance to participate in this overall uptrend. It's expected to offer another buying the dip conditions in the short term for gold traders. Any questions, guys, regarding gold? Dovish is when we see the members confirming or indicating or provide hints that they will proceed with further rate cuts. Okay, so that's negative for the country's currency. And hawkish is the flip side. If on their statement they are like a bit, yes, if we need to take action and we will high rates no matter what, if they give any hint that their very next move might be a possible increase of interest rates, not decrease, an increase higher, it means that's positive for country's currency. In this case, with currently with Fed, even a pause of rate cuts, it can be hawkish. Why? Because at the beginning of the year, or even last year, basically last year, we have seen the Fed cutting around 100 points. And into the new year, all of the market participants, the majority, were like expecting that 2025 will be another year of rate cuts, and the Fed could cut by 150 points. So the expectations were really on this in the ceiling. So the fact now that the data, their comments, changed that picture, and actually the cuts are postponing. They have detected success significantly. I mean, the expectations of rate cuts have been detected significantly. This is something that has the same reaction as the hawkish stance of Fed, because basically the delay of rate cuts, or the possibility of no change for the whole year, that basically could be a bit supportive for the dollar. Very similar. Basically, it's quite similar with. Okay, it's not quite similar with Bitcoin, but sorry, but we have seen where is Bitcoin. I'm gonna start again with the daily chart. Why? Because overall, from November up to now, what we have seen that this is a bit it's in a channel. Sorry, wrong. Yeah, it has been in a channel. Basically, it looks like a flag. Because, yeah, flag. It looks like a flag. Look at that. Yeah, it looks like a flag. So it has been in a flag, moving within this channel. Okay, so and if I just have to, let's say, see the overall picture. Okay, let me just. We have seen that Bitcoin has very similar characteristics with gold. So it has been used by market participants as a safe haven asset the last few years. An asset that is very impacted, also affected by tariffs concerns. But nonetheless, guys, let's focus on the technicals. Okay, so we have seen record highs, and basically since that record high, the 109.955 was it here, we have seen a pullback. However, remains in a channel. So that means that a retest of the bottom could be another, could basically indicate the rebound away from it and the return back to 109 or even 1010 territory to break the previous record high. A break of this previous record high obviously opens the doors further to the upside to 120 and even higher and higher possibly. But we need to see the Bitcoin rebounding and breaking the 109 level, basically the previous high here, in order to suggest that Bitcoin could, a break basically of this high could open the doors to 120,000 territory, because this is a flag, right? And a flag, basically this is a bullish flag. And if indeed we see a breakout above the top of the flag, that's a bullish sign and a very strong one. That could that indicates that we could see a move further higher. And it's not only that as well. In my PC, basically, in my other PC, not this one, I was watching basically also the moving averages. Let me change the moving averages over here. Sorry, just a second. 20 and 50. And that's the daily chart. Okay. And I want to basically change it to, my bad, I should have changed it into into candlesticks. Not black, come on. Here we are. No, where's the template, the daily one? Yeah, not the black one. Daily white, here we are, okay. So, yeah, that's my daily. I'd like to have a 21. Let me fix it a bit. Okay, so we are. So that's the, I'm gonna get rid of this one as well. So first of all, we have the flag that I mentioned earlier, right? Flag, which is a bullish flag, remember? It's a bullish flag. And plus, it's well supported by the 50-day moving average as well, which is the blue line, okay? The blue line is the 50-day moving average. So, yeah. So that supports further a possible swing higher. Not certain. We need to see the Bitcoin actually rebounding, crossing above 105 in order to suggest that it could return back to record highs and even break it, and potentially pushing the price towards 120,000. But this is just a homework in order to be prepared if something like that happens. But yeah, from a technical perspective, it remains positive. But yeah, we need further confirmation. What else I wanted to mention? And the reason is basically the fact that it looks that it reacts very similar to the gold. I mean, as a safe haven. Yeah, so NFP could affect significantly tomorrow cryptos, gold, and obviously stock market as usual. Yeah, so let me check your questions. No, Cheyenne, I'm live. I'm right now here, live. Why did you say yesterday's? What do you mean? Here, can you see at the very bottom, 6th of February? Why have you mentioned that? Cheyenne, are you still here? This is not yesterday's. This is here, me today, right now, for an hour, for the past hour, basically. I don't know. Maybe you were confused because I was showing weekly and monthly chart and daily chart. No, don't look this. I mean, this is. So let me put the line so you can see it as well. So here, 6th of February. This is still live. We are live. I'm here. I can see your comments. So I think you were a bit confused with the time frames that I was using. My bad. Guys, are there any further questions? Because we are like an hour live. So yeah. Let me know. Let me know for any assets that you want me to cover. Not only Bitcoin, gold, pound, and euro. I'm here for you. So feel free to ask anything you want before I call it a date. Out of curiosity, I'm gonna return back to the pound. Ignore this is the 1 hour chart, the 1 minute chart. Ow! Do you remember anyone that was here from the very beginning? Do you remember that we're back here? Because this is a minute chart. We mentioned that if we see a cross, a bearish cross, that will indicate a possible reversal of pound in 1 minute chart. And indeed, look, back to the bottom of the range. Some people, some scalpers might be really happy with this. So, what else? Let me though shift back to the 1 hour chart. Broken 2390, broken 2366. I had lines on these levels. Keep pushing lower. The candle in the last hours is big enough. Moving average keep pointing lower. MACD is negative. Stochastic remains negative. RSI the same. So further negative basically performance for pound. Yeah. So immediate support goes down to the neckline, basically to the. So that's not immediate, but if we focus on the 4 hour chart, we have 122.90, basically the 122.28, which is the mid of the channel, of the daily channel. That's the 4 hour chart. Okay, I don't want to confuse anyone that is an intraday trader. On a daily chart, is it possible? Is it possible that BTC can go and fill it? What is FVG? FVG. Sorry, I'm not doing good with the abbreviations. Oh, you mean fair value gap? Okay. Let me just check. Oh. Okay. I see your point. Okay, in order to explain the question by MR01, you are, let me clear basically a bit my chart. So 75,000. So you're referring to this this strong resistance level that they was seen in 2024. Okay, it's not 25,000. For me, is 23,930. Okay, here. Oh, you're referring to gap. Wait, where are you seeing gap, man? Let me just cross-check. Okay, basically I have high Kenashi. That's a mistake. So let me put back the daily. Come on. Okay, here. I get it there. Don't worry. Okay, this gap. So your question is whether it's possible Bitcoin to go down and fill the gap, this gap that we saw back in November, only if it breaks the all these swing lows. Can you see this ceiling, the the 90,000 territory. And by saying 90,000 territory, I'm referring to a confirmed closure of the daily candle closure, not just a retest like what happened here or here, a confirmed closure of the day of a daily candle below 90,000. So yeah, that's the only way to come down and basically feel based on what we are seeing right now, okay, and feel the 75.83 gap, dear Mr. 01. So I get your point, but remember that overall picture, that's the weekly momentum is really strong still. The daily is at 0, which is neutral, but is in line with the fact that it's in a flag consolidating basically. Okay, RSI is at 47, but look at this. Let me just, I'm going to hide your question for a second because I want to show you something. This is a daily, right? Unable to break below 90 since November. Also, yeah. So let me double check my moving average. This is the 51. Yes, let me put my daily, my 20 as well. Okay, let me put my 100 as well. Okay, crystal clear. This is a 20, 50, and 100 exponential. Okay, I'm just putting all this here just to cross-check what I'm about to say. So, nice support at 90,000. So we need a break of that level. 50 exponential daily moving average still holds. No confirmed closure and move below it. Several retests, yes, but no closure, decisive closure. MACD is at 0, with just the fact that it didn't cross below 0 yet indicates consolidation. But RSI, even though it's below 50, look at that. Look at that. Since September, it didn't manage to extend below 43. It constantly retested 43, constantly, but never managed to broken 43 level in RSI since September. So these are things that you need to monitor in order to help you potentially spot the possibility of filling the gap. But with the current technical picture, this is not possible anytime soon. Okay? Clear? Any question regarding this? No? Gonna wait a bit, but that will be the very last thing that I'm covering today, guys. As soon as I have the confirmation from Mr. 01 that that he's okay with, I mean, he doesn't have any questions, I'm gonna call it a date. I haven't seen the comments from Mr. Powell yet. Let me put my news feed. Basically, he clarified that it's more important than that the view of the rate path is based on the economic fundamentals. So they rely on the economic data. That's something that could open the doors to further rate cuts. Disinflation remains in place, unfortunately. So Mr. Ballet was a bit late. Yeah, added further pressure on pound. Okay, thank you, Mr. Wan. Great, thank God it. My pleasure. So guys, yeah, Mr. Powell's comments really didn't help really. They just added pressure to the pound as you have seen. Yeah, so that's pretty much for today, guys. Hopefully I managed to help you. Your feedback is more than welcome as always. Anything that you want us to change in our lives, let us know via, I don't know, comments, email if you prefer, anything, and we'll be more than glad to change things. Thank you very much. Have a great day ahead. Take care. As I said, it's an FP. We have jobless claims as well, but possibly the attention will be on tomorrow's data as well. Thank you very much. Have a great day ahead. Thank you.